So I say the word innovation and you immediately think, the pulley. Wait, what? Stay with me. Let's go back to around 25 BC. Archimedes of Syracuse. Major big brain dude. He had this incredible idea. Here's how his buddy Plutarch reported it. He said Archimedes moved an entire warship using pulleys and his own strength. That is innovation. Not 2.0 or an upgrade or the next generation, but something that changes the way we think and work and live. The heralded breakthroughs have more often than not merely walked to the edge of innovation. The cloud and AI and low code. Complex problems can only be solved by solutions that don't cause more problems. So what would Archimedes do today? He'd build a pulley and call it robotic process automation. Make the tech learn the human, name the task, name the workplace. RPA allows companies to automate at the UI level, connecting disparate technologies. Granted, that's a really wonky sentence. All it means is this: you and your employees can now pull vastly more than your own weight.
This is the new world of work. Each day looks different than the last. But whatever work becomes, the ServiceNow platform will make it just flow. Whether it's finding new ways to help you serve your customers, orchestrating a safe return to the office.
Wait, an office? What's an office?
Or solving a workplace challenge that's yet to come. Wherever the new world of work takes your business, the world works with ServiceNow.
Welcome to the future. You're gonna wanna get ready. You're gonna wanna get ready. You're gonna wanna get ready. Get ready. Get ready. Get ready. Welcome to the future. Welcome to the future. Welcome to the future. Here we are making history. Higher than we've ever been. You're gonna wanna get ready. Get ready, get ready. Welcome to the future.
You always knew you'd be in for a ride. There'd be ups, downs, twists, and unexpected turns. It would be an exciting journey, even a little scary at times. And although it's difficult to predict what's around every corner, there's something else you understood. Transformation is essential for your business, your people, and your customers, so you can stay agile, resilient, and relevant in an ever-shifting marketplace. At SAP, we understand that true transformation is a journey too. It goes beyond the edges and deep into the core of your business. But it's a journey you don't have to take alone. No matter where you're starting from and where you want to go, we're by your side to simplify planning and execution and integrate data, intelligent tech, with cutting-edge ERP that will accelerate outcomes on your terms and on your timelines. The road ahead is clear. The next turn truly transformative. It's your time to rise with SAP.
You've heard it before. The connected age. Life at the speed of the internet. It's a digital world. What you might not have heard is that we can keep it safe, because at CrowdStrike, we stop breaches. So wherever you go, go with confidence. Anywhere. Welcome to Anywhere. CrowdStrike. We stop breaches.
everyone. Good afternoon. I hope you had a wonderful lunch and welcome back to the grand finale of StarBiz Summit 2021. And whether you're tuning in via Jublia, Facebook, YouTube, or LinkedIn, thank you so much for joining us. My name is Myra Baiti, and it has been an honor to be your host for this two-day live virtual conference. And once again, if you're watching this via Jublia, the platform allows you to expand your industry network and personalize your journey thanks to its AI engagement hub. Go to the Meet tab to start building connections with other summit delegates and visit our sponsors and partners' virtual booths. Talking about the agenda, have you been enjoying this summit program so far? We'd love to hear from you. Which speakers did you like? What panels was your favorite? Let us know your thoughts. Where are you tuning in from, and what do you wish to take away from this summit? Please type in the chat box or in the comment section below. And today's program is anchored with 4 Biz-Con breakout tracks. There were 2 parallel breakout tracks that ran concurrently in the morning. And if you're watching this session now, welcome to the Digital Finance and Cashless Economy track. My colleague Gajan is currently hosting the Future of Work track on the other side, themed Rebuilding the Nation's Economy in the Digital Reality of 2022. The summit program is exclusively engineered by Star Media Group events team for you to learn and discuss how to recalibrate your business transformation journey in the age of the never normal. We highly encourage you to be a part of the conversations as we discover ways to optimize digital technologies and disruptive innovations to win 2022. In commemoration of the Star Media Group's 50th anniversary, the group has run a series of technology events under its Digital X Data umbrella, and the StarBiz Summit is the grand finale of the group's Digital X Data 2021 events. Star Media Group's Digital X Data 2021 kicked off with the Road to Malaysia 5.0 series that was dedicated to enabling digitally fueled Malaysian businesses to accelerate growth in the new Malaysia 5.0 digital economy and to drive innovative change amongst the society in building a human-centered nation powered by disruptive technologies. The StarBiz Summit is the avenue for businesses and organizations to learn and discuss about the industry outlook and market forecasts of 2022. And as I've shared earlier, at today's program, we are deep diving into 4 critical industry verticals, business areas, and organizational functions in a breakout tracks format. To realize the StarBiz Summit's vision, we are very honored and humbled with the participation of over 30 thought-leading speakers, subject gurus, industry experts, and business leaders from more than 10 countries in this 2-day power-packed program. And of course, I'd also like to take this opportunity to give a special shout out to our 19 sponsors and partners of the StarBiz Summit. Thank you very much for coming on board with Star Media Group to make the StarBiz Summit a reality and a success. If this is your first time tuning into the summit, I'm excited to also share with you that we are running a prize draw at this event, and we have a total of 15 cool gadgets worth 4,000 ringgit in total that we have been giving away. So stay with us until the end of the session to find out how you can stand one last chance to win any of these exciting prizes. And these prizes are not it. We also have a special complimentary gift from Oxford Business Group, and for your to show you our appreciation for your participation at this summit. So we are rewarding you with an exclusive complimentary access to the most up-to-date Philippines economy report worth 500 British pounds. The link to access the report will be emailed to you after the event. Okay. So let's see who won the 6 prize draw winners from the 2 breakout tracks earlier this morning. So the winners of the Sony Portable Wireless Speaker is Sunny Tan and Tan Geng Shin. The winners of the Samsung Wireless Charger Pad is Chi Min and Russell Teo. And also, Sony True Wireless Earbuds goes to SW Wong and Huzaifa Zainuddin. Congratulations to all of the winners. These are amazing gadgets, and our events crew will be contacting you separately after the event for the prize giving arrangement. And for others, keep your chin up and keep at the ready because we still have 2 more sets of cool gadgets for you to win. So stay tuned with us until the end of the session to learn how you win and how you can have your last chance to win any of these exciting prizes. All right. Let's get serious. Let's look at what we have lined up for you at this digital finance Biz-Con breakout track. We will be kicking off the program with an opening keynote by the World Bank. It follows with a presentation by the DevTeam.Space, where you will learn how to build a successful FinTech product with a remote development team. We will then wrap up this session as usual with an industry panel discussion that will be moderated by our knowledge partner, Bain & Company. And the panel discussion will be joined by our esteemed guests from Got Time Digital Bank, Maybank, Pertama Digital, and our silver sponsor, ServiceNow. I hope you are excited with this program lineup, or you're pumped up, or you're ready to learn for the Digital Finance Biz-Con Breakout track. To learn more about the summit program and the speaker profiles, you can look at the agenda if you are in Jublia, or visit bit.ly/StarBiz2021 if you're on any of our other platforms. If you have any questions for any of our speakers, please post it in the chat box or in the comment section. And if you need any assistance from us, please chat with our events crew, or you can email us at events@thestar.com.my. We got you. And for technical assistance on Jublia, you can also email starbizsummit2021@jublia.com. And if you're in Jublia, please do remember to visit our sponsors and partners' virtual booths to find out about their latest product offerings. It's special for you, so might as well jump at the chance. All right, guys, without further ado, let's jump straight into the keynote of the digital finance track. This presentation by World Bank will look at the evolving nature of digital financial services in Malaysia and the East Asia and Pacific region, as well as some of the challenges and opportunities presented by the COVID-19 pandemic. Rekha Reddy is a senior financial sector specialist in the World Bank Group's Finance, Competitiveness and Innovation Global Practice. Rekha joined the World Bank as a young professional, and since then she has managed technical assistance and lending operations in over 15 countries. Sorry, I had to read that again. 15 countries in Latin America, Asia, and Africa. Guys, here is Rekha Reddy of the World.
Nama saya Andi, saya berasal dari kota Malang, dari Jawa Timur. Saya bekerja di ladang di sini, dan kebetulan kalau di ladang kita susah untuk mengirim uang. Tapi sekarang saya lebih mudah mengirim uang dengan aplikasi di mobil saya, karena dengan mengirim uang pakai aplikasi ini, uang kiriman saya cepat sampai dan saya bisa melakukan di mana saja, di manapun juga.
Hi, I'm Grace from Philippines. I came here in Malaysia for working as a caregiver. Where my place in the remittance is very far. So I need to take 15 ringgit grab car or taxi. So when I find out the mobile apps, my money I save a lot.
Nama saya Siti Juwita, berasal dari Medan, Indonesia. Alhamdulillah, saya dapat membantu keluarga saya di kampung. Satu saat anak saya sakit dan sangat-sangat memerlukan uang, saya tidak dapat kedai yang ada lesen. Pernah saya menghantar duit, tapi tidak sampai, dan duit simpanan saya habis. Alhamdulillah dengan menggunakan aplikasi ini saya boleh menghantar duit bila-bila masa.
Terima kasih Greenback.
Thank you Greenback. Terima kasih Greenback.
Hi, I'm Rika Reddy, Senior Financial Sector Specialist at the World Bank Group, and I'm very happy to have the opportunity to address you today at the StarBiz Summit. For more than a decade, we've been talking about digitalization of financial services, its potential to increase efficiency and lower costs of transactions, and how that'll affect the trajectory of the financial services industry, the value proposition for the banking sector, and the economy more broadly. But then COVID-19 hit, and multi-year plans for digitalization of financial services have been accelerated due to restrictions on transacting exclusively. And the mindset of many businesses and individuals with respect to digital financial services has changed. In my address, Inclusive Digital Finance in Pandemic Times and Beyond, Challenges and Opportunities, I'll look at the nature of inclusive digital finance and how it has been evolving in recent years, and also at the actions and policy frameworks needed to catalyze responsible growth of digital financial services during this pandemic period and beyond. Here's an outline of my presentation. First, I will look at what financial inclusion looked like globally and in the East Asia region in recent years prior to COVID-19, gaps in growth using international benchmarks. Then I'll look at the pandemic period and how these COVID-19 conditions have provided both challenges and opportunities for the expansion of digital financial services. Then we'll look at digital financial services and how they can help the goals of financial inclusion and economic growth. And finally, we'll conclude by looking at emerging trends and policy issues to consider to leverage the healthy growth of digital financial services. So let me start by looking at the panorama of financial inclusion before the COVID-19 pandemic hit. Financial inclusion is clearly on the rise in Asia. 71% of adults in East Asia and the Pacific have an account. That increased from 55% in 2011. These are 2017 data from the World Bank Global Financial Inclusion Database, and we're looking forward to having new World Bank globally comparable data in 2022 as the process of gathering new data in 100 plus countries concludes. But in the meantime, you can see here that there's a wide range of financial inclusion across countries, ranging from 22% in Cambodia with a financial account to more than 80% in China, Malaysia, and Thailand. Similarly, in South Asia, you can see a large increase up from 32% in 2011 to 70% in 2017. Nearly 300 million accounts came from India alone, largely due to a government policy to expand financial inclusion through biometric identification and smart cards, achieving 80% account ownership. Yet many Asian adults remain unbanked. You can see globally that 1.7 billion adults are unbanked. Unbanked here being defined as lacking an account at a financial institution or with a mobile money provider. We can see that nearly half of the unbanked adults live in 7 economies, the majority of them in Asia. China, India, Indonesia, Pakistan, Bangladesh, all Asian countries with a high percentage of unbanked adults. And the unbanked are typically younger, less educated, female, or poorer. In East Asia, women represent 54% of unbanked adults, and over half of unbanked adults live in the poorest 40% of households. In East Asia, excluding China, 55% of unbanked adults have a primary education or school education or less. Why do some people remain unbanked? Globally, insufficient funds, that is, having too little money, is the answer most commonly stated in surveys as the biggest barrier to account ownership. This holds true in East Asia and Pacific, which you can see on the left-hand side of this chart, where you can see that the most common reason after insufficient funds for not having an account is the ability to use someone else's account or lacking the required documentation to open an account, or for the financial services being too expensive or too far away. Some of these challenges won't be able to be fixed with digital channels. If you lack the appropriate documentation or ID to open an account, a digital channel won't fix that. But having a digital channel at your fingertip could increase the value proposition of a financial account to someone who feels that they have too little money for an account to be valuable, or for someone who finds that financial services are too far away to be cost effective. So let's look now at Malaysia. How do they compare in financial inclusion with respect to international benchmarks? The answer is pretty well. Most Malaysians report having some form of financial account. In 2017, 85% had an account, which is well above the benchmark for the East Asia Pacific of 59%. On the right-hand side, you can see that even digital payment use compares favorably with countries that report a relatively high level of financial inclusion. At that time, Malaysia had higher use of digital payments than in Brazil, China, and Thailand, though slightly lower than in Kenya and Russia. So we can look now at some of the challenges and opportunities brought by the pandemic. COVID-19 conditions have clearly accelerated digital transformation. Results from a global survey of companies showed that 97% of enterprise decision makers believe that the pandemic sped up their country's digital transformation. 79% said that COVID-19 increased the budget for digital transformation. And in the finance industry specifically, COVID-19 accelerated digital communications of companies in the finance industry by over 5.6 years relative to their initial strategy. This indicates that banks and other financial institutions are capitalizing on the increased willingness of customers to transact digitally. On the challenge side, pandemic restrictions have lowered economic activity, making it more challenging for to achieve profitable volumes for financial transactions. But at the same time, they give urgency to eliminate cash transactions. Winston Churchill advised that we should never let a good crisis go to waste, and pandemic conditions provide an urgency to eliminate cash transactions. These three figures on this page show that hundreds of millions of people are still transacting in cash. On the left-hand side, we see 235 million who are receiving agricultural payments in cash. The middle shows the 100 million unbanked receiving government payments in cash, and 260 million using cash of the unbanked using cash for remittances. These are all opportunities to support transition to digital means globally, and COVID-19 has made it urgent that these transactions become much more efficient and safer. In Malaysia, is there room to grow digital payments? Historically, we see that there has been space to expand digital payments, particularly for the bottom 40% and other vulnerable groups. Just 61% of Malaysians in the bottom 40% had made a digital payment in the last year, while 39% of Malaysians with primary schooling as the highest level of education used digital payments. Those numbers have very likely improved in recent years, but there's no guarantee that any improvements are concentrated among the most vulnerable, meaning that we need to continue to guard against the digital divide. When we have new data, we'll be able to see how payments behavior has evolved during the pandemic. The figure on the right-hand side shows that in comparison to East Asian neighbors or other upper middle income countries globally, Malaysians were less likely to have used cash for wage payments and utility bills. However, in 2017, more than half of all Malaysians paid cash even for their internet purchases, much higher than in other upper middle income countries. We also see that during COVID-19, firms have increased utilization of digital platforms. During the pandemic, World Bank Business Pulse survey data from 2021 show that 57% of Malaysian firms report investing in digital platforms. This is higher than what we see observed in Philippines and Cambodia and Mongolia, but below what the levels reported in Vietnam and Indonesia. We're also seeing studies beginning to roll out about how various sectors responded during COVID-19. On the left-hand side, we can see that in China, transaction volumes of QR code merchants actually increased during COVID-19 in various regions. Researchers there looked at two different periods: before January 2020, when the pandemic, which is the agreed upon date for when the pandemic hit, and after. The red solid line shows the weekly actual standardized business volume in 2020, and the black solid line shows the same indicator in 2019. They were able to look at the counterfactual, that is, assuming no COVID-19, and that's represented by the red dotted line, and see an increase in digital transactions. Meanwhile, in Africa, we can see that in Rwanda, the value and the volume of person-to-person money transfers during COVID-19 also increased. There, we look at the cutoff date of March 2020 and can see that transactions increased almost 400% in the initial weeks following news of COVID-19, also accompanied by an enabling environment, including reductions of fees to incentivize digital transactions promoted by the central bank there. Let's take a look now at how digital financial services can help. Digital financial services can benefit both financial institutions and customers. First, there's the element of improved customer experience and bringing people in who were formerly excluded. Remote access, convenience and security, tailored financial products and services, and an opportunity to build financial history within a system are all attractive benefits of digital financial services. There's also the opportunity to increase revenues. With digital financial services, it's easier to expand customer bases to include new and remote areas, to provide products to new market segments, including the unbanked, and cross-selling opportunities. There's also the reduction in costs, lower delivery and channel costs, and also a reduction in cost of funds. That could be from deposit gathering or capital markets funding through digital channels. And lastly, there's the element of strengthened risk management. We find that it's easier to gather more data and automation for credit underwriting, portfolio monitoring, collection when you have all the data available in digital form. There's also efficiencies from straight-through processes, reduced error rates, investigations, and rework. Evolving technologies also have a huge potential to expand financial inclusion. On the left-hand side, we can take a look at a variety of technologies that have been used, such as mobile technologies, distributed ledger technology, blockchain, crypto assets, APIs, open banking, digital ID, biometrics, artificial intelligence. These all have had a transformational effect in various countries on new business models, new entrants, more accessible and cost-efficient services, and on leveraging data to tailor products, with an eventual impact on access, commercial viability, relevant products, and safety and customer knowledge. The traditional mechanism of mobile phones also have a high potential to reach the unbanked. 2/3 of unbanked adults were reported to have a mobile phone, and it's clearly increased. This has likely increased significantly in the last few years as the cost of phone handsets and data have continued to become more affordable. However, the challenge remains that in many countries there can be a mismatch between access to telecommunications and smartphone devices versus the digital channels that are developed by financial institutions. In some, the user interface provided to the client matters. Access to a phone means nothing if the platform for the user is not attractive. Digital financial services can also lower costs and increase efficiency for SMEs. Potential benefits again include lower costs, strengthened financial inclusion, and improved quality of financial products and services. But for SMEs in particular, the opportunities for automating internal processes, digitally interfacing with financial service providers, suppliers, and customers are also valuable. Finally, there's the increased availability and accuracy of SME information through expanded credit information sharing that improves the possibility of the SME to get credit in the future. And also, the enabling of responsible credit border data exchanges will continue to increase the availability of data across borders as well. At the same time, we're seeing new digital entrants coming in to disrupt the market. By 2020, over 300 million people around the globe were clients of digital banks. This includes WeBank in China with over 200 million customers, also Kakao Bank in Korea with 11 million customers, and Genius in Indonesia with just 1.5 million customers. As Malaysia is in the process of issuing digital bank licenses, the question is what can be done to grow this market sustainably and include sustainable financial services from these new market entrants. We can find lessons from Malaysia from other international experiences. Many digital banks are relatively new, and questions remain about how their developmental trajectory will evolve. There have been some early failures of digital banks that offer a cautionary tale. For example, Jinja in Australia, Bow and Royal Bank of Scotland. And at the same time that COVID-19 has improved the opportunities of these digital banks to capture new customers, it has also hurt their bottom line. Many of their bottom lines as transaction volumes due to reduced economic activity have declined. Regulators need to strike the right balance between facilitating entry of new financial service providers into the financial market and maintaining financial stability. They also need to look at various elements of factoring financial risk, non-financial risks, as including operational risks and business model risks, because digital banks are often more reliant on fee-based income than traditional banks. They also need to develop institutional capacities to understand and mitigate new sets of ever-evolving risks, and to manage the digital divide effectively. Currently, most digital banks are catering to banked segments or to underserved segments, but those who have some level of financial access in most settings. Authorities are trying to use their licensing framework in many jurisdictions to use digital banks to initially push for increased access for underserved and underbanked customers. So what are some of the emerging trends and policy issues that one would need to address for healthy digital financial services? They affect many policy levers and objectives. Building off from lessons around the world, there are several steps governments, businesses, and financial institutions can take to further accelerate digital financial inclusion. They relate to the legal, regulatory, and supervisory framework, a close review of financial structure and development, analysis of digital penetration and literacy, and also physical, digital, and financial infrastructure, ensuring access to those elements. These are needed to ensure common policy objectives, including stability, integrity, consumer and investor protection, a level playing field, innovation, inclusion, and of course, market development. At the same time, digital financial services bring important policy challenges. One is related to the regulatory and supervisory perimeter. FinTechs are new animals for many countries, and they may not fit in with the current regulatory and supervisory boundaries. There also may be system and capacity constraints with respect to the ability for analysis of these types of institutions. For depositor and investor risk, there may be many different types of typologies of new providers with different regulations, supervision, and transparency elements. On the financial stability side, which has received a lot of attention of late, there's the element of unsupervised linkages, and also digital financial services potentially exacerbating credit cycles with their untested credit models, or affecting banking system profitability in unforeseen ways. On the integrity side, which is the anti-money laundering and CFT, some of the elements that we see are that access to customer information can lead to abuse without adequate consumer protection mechanisms. We also see that the cryptocurrencies like Bitcoin have been used for illicit activities. Vulnerability to cyber threats is also a key issue that can affect not just individuals, but also financial market infrastructures, financial institutions, and even authorities. And lastly, there's the issue of over-indebtedness. With new and easier access to digital credit, there have been cases of impulsive over-borrowing registered. And there are some studies that some of the problems associated with digital credit are that users do not fully understand the cost of borrowing and make these decisions very quickly. Poor disclosure and transparency, as well as aggressive market practices, exacerbate these issues. Customers need to build their digital financial literacy. In addition to over-indebtedness, low levels of literacy can also lead to disputed transactions, fraud, and vulnerability to phishing and malware attacks. Some of the elements of digital financial literacy include knowledge of digital financial products and services, awareness of digital financial risks such as online fraud, digital footprint and overborrowing, digital financial risk controls and how to do that, for example, by securing PINs, accounts, other personal information, and phishing, and also knowing your consumer rights and redress procedures with your various regulators. On the regulator and policymaker side, there needs to be a continuous assessment of evidence and a management of enhanced risks. On the financial inclusion side, we're always looking for evidence of positive impact of these digital financial services and how they differ from traditional financial services. We believe that there's evidence for a strong potential for digital improvements for MSME finance, capital markets, Islamic finance, as well as insurance or insurtech. Regulators and policymakers are busy monitoring emerging risks, and many have set up a framework, but enhancements have been needed. Most risks that already exist in traditional finance, but can be amplified by digital channels. And they're largely proportional, but challenges could be limited experience and resources with managing these risks, as well as cross-border regulatory arbitrage, which one can be unfamiliar, and then again, cyber risks, and also newer risks related to exclusion, discrimination, and privacy. With respect to data privacy, access to consumer information can lead to various types of abuse without adequate consumer protection mechanisms. There are also some risks of discrimination that can occur with algorithmic scoring models for credit. Due to the proprietary nature of these algorithms by financial institutions and the amount of technical expertise needed to evaluate them, it's hard for regulators to be truly equipped to evaluate them. Regulators and policymakers are also considering policy issues around data frameworks and central bank digital currencies. Who controls data has the competitive advantage, and that is ever more true in a digital financial world. Central to FinTech, data frameworks have important implications for competition, privacy, efficiency, and inclusion. And who owns different types of data and under what circumstances of access is an increasingly important issue for various stakeholders. Frameworks need to cover collection, processing, storage, rights and obligations, individual controls, cybersecurity, and competition aspects. There's also global dialogue needed on issues such as data localization, which can be highly nationalized. There's been a lot of attention on central bank digital currencies, or CBDC. And in particular in Malaysia, there is the pilot with Australia, Singapore, and South Africa that we're eagerly awaiting the results of. For some countries, digital CBDC could pose risks for stability, and there are needs to assess risk carefully for global monetary system, anti-money laundering, and know your client, as well as various other areas, as is being done through various pilots. There's also the potential to support financial inclusion through CBDC through cross-border payments and remittances. The case for CBDC is going to be a very context-specific one. Countries will weigh them against enhancements to existing arrangements, and it will likely be an incremental approach over time. Finally, let me conclude with the policy agenda promoted by my employer, the World Bank, in conjunction with the International Monetary Fund, the Bali FinTech Agenda. This agenda lays out the need for a balanced approach and identifies 4 broad policy challenges, including fostering it and these policy challenges are common to all developing countries. They include fostering an enabling environment to harness opportunities, strengthening financial sector policy frameworks, addressing potential risks and improving resilience, and promoting international collaboration. And with that, I thank you again for the opportunity to address you today, and this is the conclusion of my presentation. Thank you.
Hi everyone, thank you Rekha. I hope you enjoyed that presentation, and thank you again Rekha for the insightful sharing and for all of the information that you've given us. And that was the keynote of the digital finance track of the StarBiz Summit. So let's move on to the next session. In the next presentation, you will learn whom is the best to hire for your FinTech product, where to hire people and which places to avoid at all costs, how to structure the remote team management process, and how to minimize the legal risk and protect your intellectual property. Alexei Semeny is the founder and CEO of DevTeam.Space, an AI-powered software development platform. Alexei is an expert in software product development and remote team management. All the recommendations in his presentation are supported by data from managing over 600 developers on projects for over 150 organizations across the world, including North America, Europe, UK, South Africa, Middle Eastern countries, Australia, Southeast Asia, and New Zealand. And if you have any questions for Alexei, please drop them in the chat box or in the comment section below. Alexei will be addressing your questions at the end of the presentation. Please take this opportunity to ask Alexei as many questions as you want. So guys, here is Alexei with his speech.
Good afternoon, everyone. My name is Alexei Semeny, and today I'll share with you a presentation on how to hire and manage a remote software development team for fintech startups. So make sure to stay till the end of the presentation because we're going to have a live Q&A. So this process I'm about to share with you is not some kind of theoretical idea or approach. This process has been actively used on more than 150 projects over the past 3 years alone, and altogether we used it to manage over 600 developers for projects for different organizations. So I hope that this process can also be helpful for your fintech startup or your larger organization and can help you to advance and hire a remote development team and efficiently manage them. So first of all, again, this presentation will be most helpful for fintech executives and startups founders. And second, even if you're not a fintech startup founder, but you're working in a larger organization and your organization is planning to launch a new product or you're planning to hire a remote development team, then this presentation is also going to be helpful for you. So first, let's talk about hiring. So hiring in office versus hiring remotely is quite different, and it has its own pros and cons, and there are certain recipes on how to mitigate all of that. So number one is when you hire remotely, obviously you have an access to a much wider pool of talent, and that makes it much more affordable for you to hire developers because the competition among developers is much higher versus your local market. And I've spent 7 years in Silicon Valley, and believe me, hiring locally within the very overheated tech environment could be very, very expensive. It doesn't matter if you hire individuals or if you're trying to hire an agency. So, and obviously due to those two factors that you have an access to a wider pool of talent, plus it costs much less, it becomes much easier process versus hiring in-house, in office. Consider taking into account the fact that also the candidates you interviewing, they do not need to travel into your office. So everything is happening remotely with Zoom calls, test tasks, and other communication tools. So the concerns, on the other hand, are that you have much less control over the remotely hired developers or team of developers because they are simply not based in your office. When we work in the office, we, in a sense, forced to communicate with one another, and you as a product owner have much more control over your team versus when you're working remotely. And that also shows itself in the risk of losing your intellectual property. So some developers could simply take off with your startup code or startup idea. And again, it would be much harder to do if this person would be working within the office environment together with you. But if you have the right process and tools in place, then all of that can be mitigated. One thing I would like to also say on hiring is that if you are a first startup founder, first time launching a startup, and you are in the fintech industry, or you don't have extensive amount of technical expertise managing a remote development team, then I would highly suggest you to avoid hiring individual developers and freelancers remotely, because they are very complex to handle and manage them. So unless you have the experience and technical expertise within that sector, then I would better suggest you try working with a larger organization or with a specialized small development team who specifically work on fintech startup solutions or fintech applications for web and mobile. So now let's discuss the common issues within the remote team management as opposed to the in-office management. First of all, in-office rules do not apply because well, you work in the same office environment, very often your team members, they simply bump into one another either near the coffee machine or during the lunchtime or after work. And this informal communication points, they have helped to fill in the gaps within your business procedures and official business meetings. Let's say one of your team members simply didn't get the task enough, didn't understand it correctly. So the other team member can help him or her out to properly onboard with this particular task. With the remote team, we have none of these informal communication points. Everything is based on request. It's either you sending somebody a request for communication via text or giving them a call, or they send you the request or give you a call. So everything should be much more structured. The second one is about inconsistency with the process. Some of you, as a product owner, might find or identify that your remote team is not really that excited of following your process of managing them. And that's usually happens either in a situation when you have a very complex and very tough, very strict process, or on the other hand, your process is very much like an in-office process, very slim, and your team members simply do not feel enough accountability in order to follow it. Then with the remote team, any tech debt is very crucial to eliminate versus, again, the in-house, in-office team environment where we communicate and socialize aside from the official business meetings. With the remote team, if things are not documented, then they're usually lost. And that relates to not completed tasks or not closed tasks in task management tool, not finished documentation, reporting, etc. And last but not least is the social fear of communication. So there are lots of people who are shy, and there are lots of people who are excited to communicate with one another. And again, in the office environment, we're all forced to communicate because we simply located in the same environment, in the same office. So with the remote team, there is no such setup. So everybody is on their own, and some people might be not as excited to communicate certain issues to other team members. That is why having a proper product development process is very important for a remote development team. So now let's cover the process itself. Within this presentation, first we'll talk about the FinTech specific things to take care of, because again, we're talking specifically about the FinTech startups. Then we'll talk about tools, then the rules of how to use those tools, and then obviously reports and regular calls. So number one, the things to take care of for your FinTech startup. Very important thing to take care of at first when you hire a remote development team or remote software developers individually, you should make sure that your development team is FinTech oriented. That means that if you are launching a product within the crypto ecosystem or traditional FinTech, your development team or a lead developer must be an expert within this type of products. Or let's say you are launching a new product for traditional FinTech, maybe a trading terminal for professional traders. That means that your lead developer should know how to trade and should actually have this maybe as a hobby. And that would ensure that you have at least the core developer within your team fully understanding the product, how everything works, and he or she going to be speaking your language, so to speak. And that is very, very important. Because why it's important is because the FinTech, again, it's a very complex industry, so to speak. So the second aspect is the regulation. So the regulations for different markets and different countries within the FinTech industry are very different. And if your development team is not aware with your industry, then they will probably miss on regulations towards which their product should comply, right? With what kind of regulations they should comply. And if you don't know all the aspects and they don't know all the aspects, that is definitely not the best approach. And there is no time to educate one another. So it's very important you find people who are also familiar with the regulations specifically for your country. That brings us to the third level, is the IP protection. So within the FinTech industry, the products could be extremely efficient, especially if we're talking about something related to trading, and they can be extremely expensive to build. So make sure that you sign the agreement with the developers, every single developer you have on the team or organization you work with, which states that it is a work done for hire. That means that all the work the developers are doing for your FinTech startup from day one is owned by you. And so there is no intellectual property transfer event based on payments or something else. This way, you ensure yourself that you own the intellectual property working with your remote team. And the last part is about the legal leverage. So if you hire a remote development team, but they're based in the other country, naturally, you don't necessarily have that much excitement of going after the development team if something goes not in the right way with legal leverage. And make sure that this organization or the developers, individual developers you hire, they either have a headquarters within your country or the developers are actually located within your country. This way, if something doesn't go as planned, at least you can apply legal measures. Otherwise, it would be quite challenging. Now, let's talk about the tools that are important to use within the product development management process, specifically for remote team. First of all, I would suggest using task manager, professional task manager like Pivotal Tracker, Jira, Asana, or something similar. But I would recommend to avoid certain simple solutions like Trello or something else, because they would not be good enough in order to keep track of all the activities within the tasks. And we'll discuss it on our next slide. Second, for the calls, I would highly suggest avoid using social tools like WhatsApp and other social-oriented communication tools for calls, because there are no recordings of these calls, so you cannot have the log, and you cannot use these recordings either for the notes or again for the legal leverage if something goes wrong. So using Zoom could be ideal, and there are plenty of other tools like Microsoft Teams and others. Text communication, same approach. If you're using consumer-oriented text messaging tools, then it's not necessary that it's useful for the team to communicate, and it's also not that useful for the business log of your communication, so you don't have the exact history of all of the team communication in one place. So using Slack, that's what we prefer in our organization, or Microsoft Teams, would usually work very well. Aside from that, you also need to have a dashboard for daily short updates. Now, that might seem like an excess, but I will explain how exactly we apply it within this process, and you'll see that it is very, very useful. In our organization, obviously, we have it as a proprietary tool, but there are plenty of similar tools on the market as SaaS solutions, and you can obviously utilize them for your team. And then aside from that, you have Git repository for code storage and other specialized tools that your developers would need to use specifically on your FinTech startup project. So now let's discuss how to use those tools, because you can have amazing tools, but the problem is that how you use those tools. If you do not know how to use the tools, then chances of you succeeding are very, very slim. So what we identified through years and hundreds of different projects is that it is very important to break down the project into different chunks, into different phases. So if you're starting a new product, that your first phase of the product is going to be a minimum viable product, the first version of your application, FinTech application. So it usually lasts between 1 and 3 months. But for the MVP, minimum viable product, it could last obviously a little longer. So what we then do, we estimate in a ballpark how long and how much it would cost to complete this first phase of the application. And then we focus on the first weekly sprint, first week of the software development process, and we allocate the tasks in the task management tool only for that first week. The rest of the tasks are important, but specifically for this week, we only focusing on them. So the rest, you don't need to spend time entering like the tasks in the task management tool for entire 6 months or 3 months of work during the first weekly session. Focus only on this first week, and you estimate every single task in hours. Now, some of your team members might say that they're not used to estimating tasks in hours, or even you might say that it's artificial. But in reality, every one of us work on the hourly schedule, because on average, full-time work, meaning we work 5 days a week around the globe, 8 hours per day, on average 40 hours per week. That is the full-time position, the definition of it, so to speak. So that means that in a nutshell, we're all working according to the hourly schedule. And when your developers, even if they do not have experience estimating tasks in hours, they start applying this rule, you'll see that they maybe miss their points significantly within the first 2 to 4 weeks. But after that, they'll quickly get used to this process, and their estimates will be much more accurate. So now, why it's important to allocate just weekly sprints and estimate only the number of tasks for 1 week is because it's very easy to allocate the tasks for 1 week of work, because it's a short period of time. And second, it's very easy to check the results of this work for just 1 week. And in our experience, we experimented with weekly sprints bi-weekly sprints and monthly sprints, and we found that they are much more challenging to work with. Weekly sprints are the best. And then it brings to the call schedule. So what we would suggest is to avoid daily stand-up calls and only focus on having one call per week at the beginning of the weekly sprint. On that, our team and estimated by the team for this weekly sprint. And this way, everybody keep accountable and everybody is on their toes, because everyone is on their toes because they know, the team you manage know that they're going to be working only on the tasks that you approved on this call and that are entered and estimated in task management tool. And you as a product owner know that the team is going to be working only on the tasks that you approve on this call. So it makes everyone accountable. And then after this, it is plenty of time to communicate in text throughout the rest of the 4 days of the weekly sprint. So what we usually suggest is to avoid communicating through the entire day. Some managers would prefer to send messages every 10 minutes to their team members. And as you might find different psychological studies on the internet, usually they say that on average it takes about 20 minutes for a person to get back into the focus state or state of flow and actually continue their work at their 100% capacity. And imagine if you would be messaging to your team members every 10 minutes, that means that they would never get back into this focused state, the state of flow, and they would be working at half of their productivity, if not less. So, and what we found that the most successful projects we managed usually have the communication slots at the beginning of the day to chat in Slack in text for about 2 to 4 hours. This way, your developers would know that they have a specific time allocated for communication and discussing any given issues. And obviously, if you have a necessity for maybe an urgent call, your server went down, then obviously you can proceed with that as well. But the rest of the day, they can focus and work on their task at their full capacity. And the last part, but not the least, that pretty much glues all of it together, the daily reports. So while you communicate through task management tool, you have one call per week, and then you have a text messaging tool. It's also very important to ask your team members to post daily updates, but they should not be daily reports half-page long. They actually should be just 1 to 2 lines long, so meaning 1 to 2 sentences long. First of all, it's very easy to write them after a long day of hard work. And second, you'll be surprised, but you as a product owner sometimes you wouldn't want to read the reports because you are too tired at the end of the day. But when those reports are so short that they're just 2 lines long, then it's very easy for you to digest and read them. And this way, you can always be at the top in terms of what has been happening throughout the day with the team progress, especially when you maybe are fundraising or you're traveling for business and you don't have enough time to communicate with the team through Slack or participate on calls, then at least you have a full log of daily updates from every team member, so you can see what has been done on a day-to-day basis through the entire week. And then at the end of the week, or I would say the first week of the following weekly sprint, you have a call to discuss the list of completed tasks from the previous week and to approve the list of tasks for the upcoming weekly sprint. And then this cycle repeats. So as you can see, it's very important to keep it all balanced and have those things in moderate use rather than in excess or complete absence. So another important factor to discuss with the remote development team is the code delivery rules. Make sure that they commit the code in a code repository on a daily or weekly basis. So in case something happened or they disappear, who knows what might happen, right? At least you have the code that they have completed and you paid for. Then obviously, you should consider a third-party code review. And with a remote development team, it should be a norm. There is nothing strange about it because you do not control the team. They are all based remotely, and you want to make sure that they deliver in the code according to what you agreed, and this is the code of high quality. So that means maybe you are not a technical founder, or your technical expertise is not high enough to conduct the code review yourself as a founder. So you can find a third party, much more experienced individual who've been helping other startups, or you can hire an agency who is specializing in that. Then obviously have backups, because technically with the remote development team, they're working not from your machines, not from your computer, as opposed to the situation within the office environments where you have your own computers there. So make sure that you have the backups of all the systems in case something goes wrong. And then I would highly recommend you to get a technical savvy advisor if you're a non-technical founder. If you're a startup founder, that could be literally a startup advisor, or if you work for a large organization and you manage a particular new project within your department, you can approach your IT department to help you out, just to advise you on certain aspects within the remote team management. And then the last part of this presentation is about the social aspects. So since we do not have that many informal communication options when we are based remotely, make sure that you are kind to one another and you are kind to your team members, because they simply cannot see your face or in what mood you are today. And you also cannot see that it's about them unless you jump on a Zoom call with them. So agree with the team that no matter what the situation is, you're always going to be communicating from the perspective of positive attitude and understanding. Even if there is an issue, then again, your team working towards resolving this issue. Second aspect is obviously communicating the news, no matter what the news are. What that means is that sometimes people are so afraid to tell you that maybe something wrong with the server or something wrong with the application, and they think that they would first fix it, and only after that they will reply to you as a product owner. Make sure that you discuss with them that nobody waits for no special situation. If something happened, then it should be immediately communicated. And technically, as a product owner, you should promise them that you, A, won't be angry, and B, you won't fire them. Because I can guarantee you on this last portion of the presentation that every single team member within the remote team will fail once or twice, even more, and you yourself included. And it's all fine. We're all human beings, so we make mistakes. But just make sure that obviously you keep a close look on that. And maybe if one particular team member makes the mistakes all over again and they're all the same, then maybe that's the time to say goodbye to this particular team member. But aside from that, it's all based on kindness, positive attitude, and very sharp communication. So I hope this presentation was useful, and now I'll be happy to answer your questions.
everyone. Thank you. Welcome back. And hey, Alexi, thank you for joining us.
Thank you
How's
for
the
having me.
weather in your place?
Well, Los Angeles is quite warm place, even during the winter. So it's roughly 75, 70-ish degrees Fahrenheit, during the day. So I can't complain.
That's awesome. Okay, cool. So we are going to have a few questions from our audience members. First of all, if anyone in the audience does have a question, do not be shy. Please do drop it in the comment section and we will address it hopefully when we have time. Before we start though, there's a pressing question that I'm pretty sure everybody wants to know. Alexi, what hair conditioner do you use? Because your hair looks amazing.
Thank you. Actually, I do not use any. So, I guess thanks to my parents.
That's good. I got it from my mama. It's a legit good response.
Yep.
Yeah. So thank you so much for your presentation today. I think it's very important to know how to manage remote teams, especially since the pandemic. So I just wanted to ask if during the pandemic, in the last a year, 2 years, I think time has kind of gone past. But in the past 2 years, how has the demand for managing remote teams, has it grown? Has it changed in any way?
Oh yeah, for sure. So at the beginning of the pandemic, we've seen businesses overall just getting shy over starting new projects and hiring more people because it was a time of uncertainty, and I would say nobody really knew where the markets would go, up or down, and how the entire economy would move. So many specialists were predicting a crash pretty much. But thankfully, it didn't happen, and the economy, I would say, I think is very strong simply because nowadays it's not like 10 years ago. We have most of the businesses operating online, and lots of the businesses, not fully, but obviously partially, have their economies and business operations running online. So in the second part of the pandemic, I would say second part of the 2020, we've seen a healthy spike after the businesses seen a recovery turn, or they understood that it's not the end of the world. And we've seen actually an increased activity in terms of hiring remotely and being open to work with remote first approach because it became a necessity. And I think it's a continuous trend because all the tools are out there that support our communication remotely and allow us to work efficiently remotely, specifically in software development world. And I think this trend will continue. More and more companies will go this route.
Definitely. And I think you have a point as well, Lexi, not just in your industry, but also we've seen an uptick in a lot of other digital adoptions all around different platforms as well as industries. Even when it comes to our previous, I don't know if you caught our previous speaker as well, she was talking about the uptick of digital usage in Malaysia and also in the region in general. And I think this unique situation also brought in unique problems. And one of our audience members, Jane from Jublia, has one of these unique problems. So she asked this question, right? Would this process, your process before, work if the remote team consists of 20 developers?
Well, actually, we did have such projects where we would have up to 20 developers on the project working simultaneously. And yes, this process definitely works when you manage even 20 developers. The only difference is that please take into account that we're all humans, so it's very hard to manage 20 people. And psychologically, it's known that I would say up to 7 people, maybe 10 would be a stretch. You can manage efficiently. So if you have a team of 20 developers, then I would highly suggest you to identify lead developers who would be able to manage 5 to 7 developers and maybe collect daily updates from them and post them for you as a manager to review, because it would be very hard to communicate simultaneously, let's say on weekly calls with all the 20 people. But if you would have one lead developer and a couple of developers, senior level, then it would be much more easier, and then they would be managing the rest of the development team.
Yeah, thank you. And I think also it links to what you mentioned before about managers in general, right? Like how you need to hire a manager that also speaks your language. If you're not a tech person, then you probably need to hire someone who knows tech but can also speak money. So that's cool. We have another one from David Wong from Jublia. Thank you so much to our peeps in Jublia who are giving us such wonderful questions. So David asked, any tools, do you have any tools that you would recommend to manage teams and projects?
Yeah, as I mentioned during my presentation, again, this is specifically for the software development team. So for task management, you can use Pivotal Tracker or Asana or Jira from Atlassian. Then for calls, it's obviously Zoom. And then for text messaging, that's Slack or Microsoft Teams. There are some other solutions, I would say maybe less popular, but those are all business-oriented solutions. And I would definitely suggest you to avoid using simplified solutions, like arcade mode, so to speak. Maybe they would be good to track your diet or just a shopping list. But for team management, please make sure that you use professional software.
Yes, thank you for that. Before we move on to our next question, I did want to ask, earlier you mentioned that you've experimented with 1 month sprints, bi-monthly sprints and weekly sprints. So that's, and you found that the weekly sprints work the best. So in terms of setting the tasks for those weekly sprints, what kind of tasks would you recommend to be set within that weekly sprint? Because I imagine there'll be a variable amount of different tasks that you could set. How would you prioritize those?
Yeah, well, again, during the software development project, tasks could be anything, right? Even if you during the design phase and you're designing the user interface, so even those tasks could be allocated and estimated in hours for a particular weekly sprint. I would say the main point here is that just keep in mind that the weekly sprint is just 40 work hours on average for a full-time employee in your team. And that means that whatever the tasks they might have or you have on the project, it definitely can be allocated. There might be some difficulties when the tasks are a little bit more complex and they might take more than 40 hours. But then again, you can simply put it exactly like how many hours it would take specifically during this sprint, and then the second estimation, like how many hours it will take total. Again, it's just for your team to make sure that you're all on the same page and you fully understand each other, even though you're remotely based. So you can see, okay, for this particular task, we're going to take 40 hours for this entire week for this particular developer, but the overall task will take, let's say, 65 hours or something like this. So this way everybody's on the same page, and you as a product owner and your developer would know that you're busy with this task this week, and a part of this task will be continued on the second weekly sprint.
Okay, thank you. So just to recap, that means you take whatever that you can you take whatever task that you can, and then you break it down into a weekly sprint where then you can complete it within that time. Okay, cool.
Yes.
We have another question from, So we have another question from Chin On Ong from Jublia as well. So she asks, other than digital finance, does algorithmic trading solutions for retail or pro investors / traders have some sort of future as well?
Okay. Well, let me digest it. I'm not entirely actually sure I fully understand that, because technically algorithmic trading and it's been evolving into the digital world, and that's just the future for pretty much everything we do, right? So everything is becoming digitalized. So I'm not sure how professional investors, how they could get aside from that. I would say maybe it's not a direct answer to this question. Well, maybe direct answer is just everything is getting digital. So I'm not sure what other routes we could take in the real world in terms of the investment, because digitally everything, I would say, is simplified, so to speak. So we need to make less steps in order to achieve certain results, and certain aspects can be automated, so we can make less steps again to achieve a specific result. So that's why overall digitization of all sorts of products, including trading, investment, and I'm speaking about professional investment too, of large accounts, trading funds, etc. So all of them are turning their heads into the world of crypto and digital finance. So I think that's the main route.
Okay, wonderful. So the short answer is yes, but it depends on what industry you're in and what you need it for. Am I wrong? Am I right? Let me know.
I would say literally anything related to finance is moving digital. So this is like yet another boom that we experienced. The first wave was when we've seen the PayPal with and some other products that would help consumers, and now we're looking at the infrastructure and investment and banking. All of them are moving even further into digitization. So I would say that the only future is just digital. So that's the answer to the question.
Wonderful, thank you. I agree with you. That's why I am here emceeing this event, and we have a lot more people who are also interested in this. And we have one of these from named Kamaruz Afandi from YouTube. Oh, sorry. Yes, Kamaruz Afandi from YouTube. Apologies. So the question is: do you recommend a transition to a local team? And have you had any experience facilitating some knowledge transfer from your remote team to a local team?
Yeah, sure. Thank you. So I wouldn't recommend moving to a local development team unless you have some upsides, right? So if your remote development team is already successfully delivering the product, then it does make sense to continue working with them. However, as I mentioned during my presentation, is that it's really good to have a technical savvy advisor, or in your case, if you're not a technical founder or not a technical product owner, then I would highly recommend maybe hiring somebody in-house, at least one person who would be able to help you to hold the technical expertise in-house. And if it's your personal preference or your company's preference to start building an in-house local team, then by all means, obviously do that because it's up to you to decide which way to steer your business or your product. And then, yes, we had plenty of experiences moving the products from our remote teams to the in-house teams of our clients. And that's a normal process. Plenty of companies been doing it for years. And with remote team, there is no difference. As soon as the code is clean, the documentation is in place, and the process is streamlined, the onboarding of new development team members is pretty much an easy one. So there are no issues.
In that same kind of vein, what are some unique tips or some specific tips that you could possibly give to our audience members regarding that transfer of knowledge? Anything that they particularly pay attention to?
That's a good question. Enough for another discussion. So, well, first of all, I would definitely recommend you to check off all the legal papers and that you have all the code under your accounts, right? So that is the first level of transition, so that you know that legally you are protected, legally you own everything, and then that the code and the server accounts, they all belong to your company. That is the first step. And then obviously you would need to transition your, I would say, knowledge or development knowledge to your new team members, let's say in-house team members. Then you would need to identify one or multiple team members from your current remote development team who would be responsible for the transfer of knowledge and onboarding new developers. Because in a sense, for them, there should be no difference whom they would onboard, yet another developer with a remote team of their own, or this remote team would onboard your in-house developer and explain him or her what to do with the code and where to start. And just make sure that you are on the same page with this remote team, that this process is starting, and that these are the particular people who are responsible for this. And then make sure that you keep an eye on this, how the process is going overall, and obviously make sure that you schedule certain timeline of when the transition would be completed. And again, if the code is clean and everything is going well, then it shouldn't take that much time. Usually the transition could take anywhere from couple of days for simple projects, up to entire months for more complex projects, specifically within the fintech industry or healthcare.
All right, thank you. So I think if I could take one thing away from your presentation, and you can correct me if I'm wrong, but it is that even though we are unstructured and all over the world in terms of the team, but in terms of structure and in terms of accountability, you must make sure that you have people who are in charge in order to help distribute and streamline that process of communication as well as development, even though you are not in the workplace environment. One of the big takeaways. Am I correct?
Yes, exactly. So you absolutely need to have a person who, like, again, this person could be you if you are an experienced product owner and you've been managing developers before, and then you can just take some takeaways from my presentation and apply them successfully to your team management. But if you do not have such experience, then I would highly recommend you to ask your remote team to supply you with this type of technical account manager or the project manager to help you set up this process correctly, or you can simply hire somebody in-house who has this experience managing remote teams, because managing even in-house team is a very complex task. Managing a remote team is equally complex, if not more complex, if you don't know what you're doing. So having the person in place who knows how to deal with this process and how to correctly manage the team and the overall product development process would increase your chances for succeeding dramatically.
All right, thank you so much. Unfortunately, we have run out of time and we have to move on to the next one. But before we go, do you have anything, any last words, just very quickly before we go?
First of all, that's a Thanksgiving here in the United States, so I wish everyone a happy day and happy Thanksgiving, so to speak, just as a local tradition. And good luck everyone with their products, and obviously pay attention to the process. That's the key.
All right, thank you so much, Alexi. And thank you so much for all our audience members for giving in such wonderful questions. I will be back soon so that we can move on with the rest of the program. I'll see you later. Bye. Bye, Alexi.
Bye.
Hi guys, I'm back. I hope you have enjoyed Alexi's presentation earlier and learned something about managing remote teams. So thank you, Alexi, once again for your insightful sharing session. Southeast Asia's digital economy is experiencing a period of rapid growth. According to the latest Economy Southeast Asia 2021 report from Google, Temasek, and Bain & Company, the extraordinary shift in consumer behavior has led to the rise of the digital merchants. There is a significant opportunity in the region for established players and newcomers to serve unbanked and underbanked consumers. This panel will discuss how the financial services industry can do better in rebuilding their business growth and transformation journey in 2022, or in this case, in the never normal period of the world, be it with or without tech optimization. Our first distinguished guest of the Power Panel concurrently manages a network of related digital companies in the Gokongwei group of companies. One of those companies that Jojo Malolos leads is being the president and chief executive officer of GotTime Bank, one of the only 6 banks which was granted a digital banking license in the Philippines. Prior to Gokongwei Group, Jojo was the CEO of Wing Cambodia, a pioneering mobile financial institution that has successfully brought the unbanked into Cambodia's mainstream financial industry. That is quite an achievement. Our second guest of this panel discussion is Muhammad Suhail Amar Suresh. Suhail is currently the Group Chief Technology Officer for Maybank, the largest financial services institution in Malaysia and the 4th largest in ASEAN by asset size. Suhail formulates technology strategies and leads digital transformation across the Maybank Group. And our third guest is Saifi Akhtar. As Pertama Digital's Director of Strategy, Saifi is moving rapidly to build an Islamic digital bank for the financially underserved in Malaysia. Saifi is a dynamic entrepreneur in building and growing tech companies internationally. He is also a 2-time Gold Award winner from the UK Department of International Trade for Entrepreneurship. Our fourth guest is currently a senior manager, solutions consultant at ServiceNow, where he is the primary consulting owner with strategic customers in ASEAN. Over the last 14 years, Kokmun has been successfully helping enterprises to elevate their digital experiences for employees and customers in various domains, including service management and security operations. Last but never least, our panel moderator, Adarsh Baijal, is a partner based in Bain & Company's Singapore office. Adarsh is an expert in the firm's strategy and digital practices with deep experience in the financial services, technology, and agri-business verticals. We cannot ask for a more powerful, jam-packed lineup of speakers to discuss this recalibration of our financial services in the age of the never normal. If you have any questions for the panel, once again, do not be shy. Don't start now. Please post in the chat box or in the comment section below. All right. Adarsh, I'm sure the audience is very eager to hear and learn from this panel. So whenever you are ready, you can take it away.
Thank you, Myra. Thanks a lot. Good afternoon to you all. It's a pleasure to be here with such a distinguished panel. Maybe just to kick it off, a few comments from my side. As Myra mentioned, we have recently launched our flagship annual research together with Google and Temasek called The Economy on the state of the digital economy in Southeast Asia. As some of you may have seen in our findings this year, we have seen a real resurgence in the digital economy this year. We estimate the total economy is about 170 billion in GMV, on track to reach up to $1 billion by 2030. We found that the surge of adoption seen since the start of the pandemic last year is here to stay, both on the consumer side and the merchant side. This has also been a record year for investments, with almost $11.5 billion of deal activity just in the first half, putting it on par with the full year of deal value last year. As Myra mentioned, we've seen a huge growth on the merchant side of things, and it's a pretty exciting time for digital financial services. So maybe I kick it off with a question to all of our panelists. As you reflect on this past year, what a whirlwind of a year it has been. The rapid growth of the region's internet economy together with the COVID pandemic. What are your biggest takeaways on the region's digital economy? And maybe I start, Suhail, with you on what are your takeaways from this past year?
Hey, good evening, everyone. Thank you, Adash. From my perspective, yeah, I mean, the pandemic over the last 2 years, right, definitely has accelerated the internet economy. I mean, when I talk about acceleration, I'm saying anything between 5 to 10 years, right? And if we step back and analyze this a bit, my take is key to this acceleration is really about adoption. Those that are already on the internet economy have increased their usage on a day-to-day, on a day-to-day basis. But more importantly, like what we see or what I see, those who have been extremely resistant in the past, we see them being converted. Adoption is definitely at all-time high. I mean, our statistics, our number shows us that adoption is definitely at all-time high. Yeah? To add on to that, right, some trends that we see, right? All of us know, all of us who are here probably know this, right? Online shopping has seen a surge. More than a third of digital service users are new to online shopping, and they have embraced this and they are on the wagon. The other is, of course, things like food delivery, very steep uptrend.
And also,
and I understand, right? Google's forecast, if my memory holds me right, it's about USD 8 billion in Southeast Asia by 2025 as an industry. And the other that we see booming is things like streaming, home streaming and entertainment, right? A case in point is Netflix, right? They have seen 16 million new subscribers. And likewise, things like what all of us are doing now, working from home, right? That too, we see a boom, right? In Maybank, where I come from, right? We see similar trends, right? As at May 2021, our online retail transactions on our digital platform grew by 51% year on year, right? We see customers' preference towards being served online all the time, yeah? And this is growing on a day-to-day basis. And likewise, transactions like QR Pay, right, via mobile grew by 200%, meaning it just emphasizes the fact that the society as a whole, the economy as a whole, is an accelerated pace in moving themselves towards cashless transactions. Yeah. Similarly, businesses and SMEs likewise, right? We see them equally positive, embracing digital means. In Maybank, from February this year alone, we had about 100,000 new accounts open digital online, and we see this growing. Yeah. So to sum this up, right, with this surge in adoption, right, I would reckon that the demand for digital and internet services will increase, right, will continuously increase, with consumers or businesses choosing three distinctive characters of that. Yeah, one is, of course, they want speed. The other is, of course, convenience, right? Give them that package coupled with giving them continuous assurance that it's all secure in a secure environment. Yeah. So we see that really in the upward trend. Thanks.
Thanks, Aurelia. It's an exciting time, as you said, 5-10 years acceleration. Maybe coming to Kochman, you next. So what's your reflections on the past year?
I couldn't say it better than Sohail. Yeah, I think if I can split the observation into two parts, right? From a consumer standpoint, I think for the past 2 years, it has been life-changing to say the least. I think technology has actually changed the life of so many people, not just helping them keep sane over the past 2 years when they're stuck at home, but at the same time, I think technology has also helped save a lot of life in the sense of providing job opportunities to workers in the gig economy. Like what Sylvia was saying, talking about food delivery has seen a tremendous adoption, tremendous uptake, and so on and so forth. So I think that by itself is I absolutely agree to what Sylvia has mentioned. It accelerated the technology adoption by 5 to 10 years at least. But from a provider standpoint, I think that poses a whole lot of new challenges as well. On top of having to be extremely convenient, having to be extremely competitive in terms of price, having to be extremely secure for the users as well. I think one thing that has been apparent to ServiceNow or our customers has been the ability to differentiate on service, right? They can only so much the providers can actually compete when it comes to price. So having the ability to compete on service is something that is actually becoming more and more apparent. And we as a company, we see that a lot more providers are actually putting a lot more emphasis and focus on those areas.
Yeah, it's a great point. Maybe coming to you next, Saifi, what did you think from the past year?
Adarsh, thank you firstly for having us on this panel, and especially for publishing the economy report with Google and Temasek since 2016. It certainly has really driven a lot of the decisions we've made at Pertama Digital as we build some impactful solutions for the citizens of Malaysia. Now, from our perspective, it's certainly the right place and time to be in the business of digitalization. Okay, the world is experiencing a flight to digital, and Southeast Asia is at the heart of it. And this has been spurred, of course, by the pandemic and the movement restrictions that followed very closely after. Now that smartphone ownership is basically universal in most of the countries here in Southeast Asia, our people are beginning to develop new ways of doing things and getting things done in their day-to-day lives. And this is a chance for us to enable them with digital solutions like e-payments and virtual communication. So our biggest takeaway here at Pertama Digital has been that for most of our consumers, digital right now is merely an alternative and not yet the default. Okay, and we see this when movement restriction orders are lifted, and you straight away see rush hour traffic returning. Okay, you may have employees that are used to working from home, but maybe employers are not ready yet. You also see businesses, in both urban and rural areas that don't actively promote digital payments, and you start to see how cash is still king, in this part of the world. So in summary, from our perspective, this flight to digital is fragile, and if the people are not kept at the center of digital products being developed by businesses like ours, then these great opportunities could be missed.
A great point. Maybe coming to you, Jojo, you're starting a whole new venture. So, thoughts on the past year?
Yeah, I think if you summarize everything that Suhail, KM, and Saifi had mentioned, probably that's it, right? So I'd like to share from perspective from the Philippines, for example, from our organization. Maybe on top of what has been said, adoption is definitely something that is unprecedented. The levels of people from different classes of the society are actually adopting to some digital means, and the pandemic had done had helped do that. But I think the more focus that we are looking at is on what you said earlier about the investments that have been put into ASEAN. which is going to be even much bigger than what we had last year, is the introduction of a lot of innovations, right? A lot of innovations, not only on the FinTech, health tech, regulatory tech, or edutech. And all of this are basically contributing to the consolidation of the behavior of the consumer as they adopt. They link one industry to the other. And in the middle of all of that is always the financial services, right? So I think there are more problems being solved by innovation. They're definitely bringing people to an experience of really the new normal, where it's easy to order, easy to get to the hospital, when you're feeling bad. It's easy to go to school, even though you're not enrolled physically to go to another school. So all of these things that are happening, and this is basically being incentivized even by the influx of foreign investors into the ASEAN, is I think a major takeaway. But to KM's point earlier, it enhances the VUCA part of our of what's happening. The VUCA is it will continue to be volatile. It will continue to be uncertain. It will continue to be complex and ambiguous. And I think by getting into all of this new type of VUCA ecosystem, it will make it a lot more challenging to the operators, to the players, to remain firm with their business models and actually be able to survive the onslaught of adoption, the onslaught of new technologies coming in, and so it's both bad and good. But the point is that this is the new normal. This is the never normal. It's a change that probably we asked for, and now that we have it, we have to contend with how we're going to sustain what we have introduced this during in the pandemic, and sustain it so that it will continuously have an impact on society, continuously improve the economy of emerging markets or countries, right? So,
yeah, it's an excellent point, and maybe building on the VUCA point, and some of the comments made earlier around consumer, their experience on digital and why they are adopting. One of the things that we found is, digital consumption is now, deeply embedded as a way of life in terms of the growth of adoption. But the expectations of customers are constantly escalating. One of the aspects of what you mentioned, Jojo, is that the consumer expectations particularly on the digital experience is escalating every few months. And would love to get thoughts on how are businesses keeping up? How do you actually contend with, not only delivering a great experience and having a good speed, but basically staying agile by coming up with new benchmarks every few months. Maybe we'd love to start with you, Kochman, on how do providers work with you on keeping up with their consumers?
Yeah, and thanks for that, Adash. I mean, there's so many stories that we can tell. But one that really comes to mind, it is actually with a bank in New Zealand called Kiwi Bank. For those of you who are not familiar with Kiwi Bank, it's actually state-owned. It's relatively new. It's about 20 years old, and it has got the most amount of branches in the whole of New Zealand. About 260 branches, if I remember correctly. It's got 2,000 over employees, and it's got slightly more than 1 million customers countrywide. What happened is, as with most banks, Kiwi Bank is not built for pandemic scenarios, right? No banks in the world is actually built to cater for loan deferments, moratorium, and all of those things, right? So what happened is, when the pandemic hits, they went into lockdown, and what happened was their customers can't actually walk into branches as they used to anymore. And frontliners can't actually go serve the customers as well. So what they did was they actually came to ServiceNow, and we actually did what they call a customer care service online portal for them within 4 days. We talked about agile earlier, right? There's no point in spending a month when the pandemic is over before the technology is up. So what they did was they used 4 days to actually create this interaction channels that actually funnels all the interactions from the customer to the backend staff. And what that happens was that within the first few weeks, there were close to about 20,000 interactions being logged, and that actually transformed the whole perception of the bank altogether. Not only that it increases the efficiency of people from the bank using the system and serving the customers, but it also provides a whole new different perception of how consumers actually look at the bank. Remember I talked about earlier that the key differentiation here is service, right? So this is actually a very good example of how some of the other providers actually leverage on ServiceNow technology to achieve that. I'll probably pause here before I start sounding like a product pitch, but I'll pass the floor back to you, Adarsh.
4 days is incredible. That is amazing. Maybe Saifi, what your thoughts? How are governments thinking about this? Shift in what customers expect in interactions with the government as well. I guess now on every domain.
Yeah, so our experience is very different from what an organization like ServiceNow perhaps have. Pertama Digital is a problem-led organization, right? So this simply means that we seek to understand challenges faced by a large group of citizens, and then we find the best ways to solve them. And it just happens to be that in this day and age, the most cost-effective way to deliver impactful solutions is through digital solutions, right? And at the moment, we are focusing on solutions that enhance how the citizens engage with their government. Okay, and for us, our success stems from our holistic approach. So our solutions, they meet the needs of not just a member of public, but also the government officers and the agencies that they work for. Right, all these stakeholders need to be tied together, and all their needs need to be met in order for a solution to be successful. So as a business, we digitalize payments, right? We digitalize all kinds of payments to the government or around in the public sector. We automate government agency workflows to improve their service delivery, and we also optimize how the government communicates with individual citizens via instant messaging. And in the course of our business, we get to witness, just as you said, firsthand how high the expectations are these days from the public, especially when it comes to government services, right? And largely, these expectations are driven by the otherwise wonderful experiences that we all have from apps that come up of Silicon Valley. We expect everything to be beautiful, to be fast, to be fun, and to be free. Okay, and at the same time, the pandemic has then given us an unprecedented opportunity because it has forced millions of Malaysians to give e-government services a try. Because so many government offices have been closed during MCO and movement restriction orders. So now the tricky part is to not let the ball drop. All right, and you can see that across the world, going digital isn't always a runaway success. So last week, big news out of the US is that N26, which is one of Europe's largest digital banks, pulled out of North America after just 2 years of operations, right? And this week, we've had a leading bank in Singapore experience major internet banking disruptions.
Yeah,
I think it would have affected you as well. And even here in Malaysia, we've had complaints in the public domain about certain government apps and their usability. So what I'm saying here is that together, the private sector, we need to strive to maintain public confidence in the digital way of life. Now that we've been given a silver platter, people have been forced to go digital, we need to keep them digital, right? And what we see is that in our conversations with the government, we have to drive messages to them that in order for the public services to go digital successfully, right, we must make sure the value proposition to all stakeholders is super strong. Okay, you can have an ugly app, right? As long as it really solves a big problem and it solves a big pain, then adoption will be great, right? And we have to always think positively about how we strive to meet these heightened expectations, right? And I'm glad to say that the feedback from the public sector, at least here in Malaysia, has been very positive.
Fantastic. Good. Let's dive into the digital financial services opportunity now. It's been fueling the growth of the internet economy. It's one of the most exciting verticals from an investment perspective as well. Maybe starting with you, Suhail, how is Maybank thinking about your transformation, and where do you want to go after this opportunity?
Thank you, Arash. I mean, very interesting. Maybank, we have always been in the forefront of digital. I mean, for the longest time, yeah. And with our recent 5-year strategy moving forward, we call it M25. It's all about being pervasively digital, where we are very much centered on our customers, right? We begin with the customers. It's all about the customer's persona. And that's guided by our core principles of, trust, experience, and resilience. Yeah. This is driven by 3 key outcomes. Yeah. The first being customer acquisition, importantly via digital means, digital onboarding. Yeah. That is, it has to be truly seamless, right? And that's what drives us. Yeah. We're very focused into it with that. Happy to share that we are the first bank in Malaysia to offer eKYC end-to-end, right, on onboarding customers, and the first to offer a Sharia-compliant e-wallet. Maybank in Malaysia, we're very big with Islamic banking, yeah. So we were the first to offer Sharia-compliant e-wallet. So we see the adoption and the embracing of these initiatives that we have put on place as a foundation. It's huge, yeah. The second is about growing our, I would say, digital proposition. Yeah. What does this mean? This is not just about making a manual process available on a digital platform. It's about really re-engineering, rethinking end-to-end, right, the entire process, where we build, we have things like RPA, bots in between to automate processes. Right, a case in point is our digital retail loan. Yeah, digital retail loan that we launched sometime last year. Right, end to end, it's fully straight through. A wee bit of machine learning and artificial intelligence built in to ensure that we can model the analysis. Right, so customers can apply for a digital loan and get it approved, and the money disbursed into their account in less than 10 minutes, provided your documentations are in order. You get them all, within 10 minutes, right? In the past, it probably takes us a week, maybe more than that, right? And today, and that served us well, right? Because a lot of SMEs in this current environment, right, they need a lot of assistance, such assistance, yeah. So that served us very well, yeah. The third piece is about our digital. It's on our digital proposition, right? It's about how do we go beyond banking? Yeah, it's not just about banking anymore, right? So with that in mind, sometime late last year, we launched our new mobile banking app. We call it May, right? It's not just a banking app, right? It's truly a lifestyle app, right? And what we are seeing is that the interaction with our customers have significantly increased. We see their presence on our app. The stay time on our app has significantly increased as well. They use our app to buy things like, as an example, right? Buy movie tickets, order food. We have a platform where end to end, we can actually order food and have that delivered to your premises. Yeah. And the more sexy stuff is really about even financial planning, right? Within the app, you can actually plan your finances, have things like a savings campaign and everything else within you, your family, your friends, and everything else, right? And you have the opportunity to track your finances. So it really helps in this current times. Yeah. Why? Our intention is this, right? Our digital solution will or must not just provide financial services or be a means of purely undertaking banking transactions or payments. It must include or encompass other lifestyle or complementary features, right, that supports our customers in their day-to-day activities, right? It has to be encompassing. Like ultimately, what we want is this, yeah. We want to be able to ensure financial inclusion by reaching out to the underserved and the unserved segments by providing them, I must say, quality access to financial solutions. Yeah. This is indeed true to our vision of humanizing financial services. Yeah, that's how we see the overall digital financial services for the Maybank Group. Thanks, Arash.
That's great, and a number of innovations in a short time. But I want to pick up on the last one around serving the underserved, and would love to bring Jojo into this conversation. What are the opportunities that you are seeing in Go Time, Jojo? Is it on the underserved? Is it broader?
Yeah, thanks, Adash. Well, I think the institution of a new category in the Philippines by the Central Bank of the Philippines of a new banking category, which is a digital bank, actually specifically requires us, all the six companies that are approved to be digital banks, requires us to really, create the impetus by which the underserved or the underbanked will really be addressed. The requirements for bringing them to the mainstream financial services will have to be addressed. So that's already a given. I think our metric is that at the end of the operations, be it 5 years, is that we should have at least contributed to the emancipation of the unbanked, so to speak. But consistent with what I mentioned earlier, the opportunities really lie on the level of adoption that everybody has really reached in terms of appreciating and understanding why they really need to be in the mainstream of financial services, right? It's one thing to say that we will bank the unbanked, but sometimes when you bank them, they don't know what to do with but when they're banked, right? So sometimes you bank people who are not really bankable because they don't have money to put in savings, for example. So the objective really is to consolidate what the fintechs have really achieved so far, new types of services, new problem solved, or new pain points addressed relative to the unbanked, basically making full use of their power to be banked, right? So this takes care of giving them livelihoods, and the only way you can give them livelihoods, create opportunities for them to borrow money, and then when they borrow money and then create their own businesses and livelihoods, you have to give them support mechanism by which they can really succeed in their businesses. So all of these things are opportunities, and we're fortunate that the pandemic has really created a lot of landscape by which they can probably operate successfully, right? So it's not necessary for us, for GoTime, to just zero in on the digitizing everybody. I think it's going to be approached on a hybrid way. Cash is still king to most of this underbanked and unbanked, so we need to find a way by which we can manage the behavior towards being digitized and being successful in their businesses, and also using cash that they will digitize so that they make everything more efficient for them to be more successful. So the omni-channel strategies that are now coming out, the TikToks, social commerce on TikTok, social commerce on YouTube, social commerce on Viber. The Philippines, I think the Filipinos are well respected for being the highest user of the internet, online, right? About 11 hours a day. Filipinos go to the internet 11 hours a day, and you can just maximize and find out what they use that time for, 11 hours a day, and find ways by which DFS can have an impact on that. So it's both it's both tuition fee that we've paid to make them aware of how easy it is now to move money, how easy it is now to borrow money, how easy it is now to pay your loans, and we incorporate this into this the setup that the pandemic had provided us, which is an omni-channel approach, offline and online going together. Offline is nowhere to go. Offline is here to stay, right? So in GoTime, our plan is to really make all of these mom and pop shops be at some point in time be capable of doing financial transactions, right? You go queue to a supermarket and you will see that the cashiers can actually also punch the food or the goods that you buy, but they will also be able to do financial transactions. So the biggest opportunity for us really to democratize the financial industry, services industry in the country. And what better way to do that with a conglomerate that we are in, which is one of the biggest in the Philippines. We have interests in airline, we have the biggest airline company in the country. We have one of the biggest snack manufacturing company in the country. We have a huge retail footprint. We have about 55 malls, shopping malls, and about 35, 37, residences on a property development company. We have a bank also. And so we are going to take advantage of all of these critical aspects of how we have managed ecosystems and then how we have continuously built businesses to grow the economy of the country. And of course, we're bringing in Time Bank of South Africa to allow us to get a peek and use innovations that has been proven successful in South Africa.
Exciting times. Would love to talk a little bit about the small business side of things or merchant side of things. As we were talking about in the introduction of the panel, that has been a highlight of the story over the past year. And I remember for many years prior to this, we have been talking about how these small businesses need to be, brought online, and there's a lot of inertia and difficulty. But it seems like there was a tipping point given the pandemic. So we'd love to get the thoughts on that. Maybe starting with you, Saifi, on how do you see this evolving in Malaysia? What are the biggest opportunities to serve the merchant segment?
Okay, one thing that I would like to get out of the way first is how entrepreneurship itself has evolved. So I would say pre-pandemic entrepreneurship was more about, if you're familiar with Maslow's hierarchy of needs, it was about the desire to be the best that one can be. It was about self-esteem, recognition, freedom, and so on. The pandemic then came about, and so many people then needed to make ends meet, whatever the cost. And so it started to become more about personal security, about making ends meet, putting a roof over your head, right? So we are going to see a whole wave of entrepreneurs that are of course. Okay, so sorry, there was a drop in the broadcast, so there was a bit of a jam over there. But anyway, so the first thing I want to get out of the way is that entrepreneurship has evolved thanks to the pandemic. Pre-pandemic, it was, if you're familiar with Maslow's hierarchy of needs, entrepreneurship was about a desire to become, the best that one can be, or to achieve certain levels of status or recognition and so on. Now, because of the pandemic, so many people have turned to entrepreneurship because of a need to make ends meet and to provide for their families and to pay for school fees and whatnot. So we are seeing a lot of entrepreneurs come into the fold that otherwise would not choose entrepreneurship as their first choice. Okay, so with that in mind, some of the observations that we are making around the digitalization of micro SMEs is that first and foremost, cash is still king. Okay, there are close to no small merchants here in Malaysia that we have come across through our engagement with the market that actually prefer e-payments versus cash. Okay, and that's because digital financial services, they tend to favor the consumers and not the merchants. For example, when you make a cashless payment to a small vendor, she may only receive or have access to the funds a few days later because of the business models that e-wallets apply, right? And this is despite the technology being available for these funds to be instantly available to the sellers. So on that note, from our perspective, digital financial services needs to be developed to better meet the needs of all stakeholders. That's the first one. The second is that MSMEs themselves, they need to learn how to diversify. There are lucrative gaps in the market that MSMEs could supply, but they are currently underserved. So, for example, we see a healthy participation or digital participation in the food and beverage sector, but less so further up the supply chain when it comes to, say, the manufacture and supply of containers or plastic bags or ingredients, or even right up from the agricultural sector and supplying into the F&B market. Third, we feel that entrepreneurs, especially these entrepreneurs who are not entrepreneurs by choice, need to be left to focus on making an income and not be overcome by the administrative responsibilities of operating a business. So we need to make entrepreneurship attractive and remove the red tape through digitalization. And that's something Pertama Digital is working with public agencies to do. And so with a holistic approach to DFS by providers like ourselves and the rest of you, I think we can solve some of these problems for MSMEs together.
Yeah, absolutely. So I'd love to shift to a little bit talking about some of the enablers as we look ahead, and we've touched upon a few of them. But we said as we look over the next 10 years, there are a number of things that we need to still address so that the digital economy continues to thrive. This includes one of the big topics that has been around for the last few years on talent. So we still need to solve lots of talent issues, whether it's capability development, whether it's how the workforce itself is evolving with part-time work. It also includes some new topics such as data, both infrastructure and regulations. It includes sustainability in the form of ESG, and as well as inclusion to make sure that we don't leave people behind. So would love to get thoughts on a few of those topics, and maybe I'll start, Kaufman, with you on the talent equation or any of the other enablers. What are your views on how well companies are prepared to kind of navigate the shifts here, and how do they keep up? How do you keep up maybe within ServiceNow? How do you help others?
I think thanks, Adarsh. I think the shift is real, right? I mean, it has become it has come to a point where the employees has now options to whether or not I want to travel and get stuck in traffic for an hour to get into the office versus being at the comfort of my own home, walking 2 steps away from my bed and start working. So that has actually kind of changed the dynamics of employment quite a fair bit in our point of view. And we've actually seen this across a lot of our different customers, across different segments, across different countries as well. Like before, I just want to give you an example of a bank, right? Of an international bank that operates majority in Malaysia and Singapore. So they've got about 90,000 employees globally, and they've been a long-time ServiceNow customer that have been using us quite a fair bit. But what had happened was when COVID hit, what they wanted to do was actually to use this flexibility and market it as a differentiation for the bank, right? In order to attract talent. So it doesn't matter where you are, it doesn't matter where you're based, it doesn't matter where you work. You're more than welcome to come work for us if we identify you as a talent, right? But in order to do that, there are a number of processes that needs to be in place, especially when that person doesn't really fancy going into the office, right? So one of the things that they have actually done was that, or rather one of the regulations that they have is that all employees that are working from home need to actually sign a third-party declaration form. And a third-party declaration form is traditionally pen and paper. It's traditionally physical. So what they did was, again, to Seho's point earlier, not just digitizing what is manual, but really to kind of reinvent or re-engineer the process altogether. And they did that on the ServiceNow platform. And that has actually saved everybody hundreds of hours from submission of the form to actually processing of the form to eventually holding it to legal and compliance and say that, hey, you know what, these guys have actually are actually permitted to actually work from home. So that is just one of the many examples that I would like to share on this forum.
But maybe good to get your thoughts, Sohail, on how are you managing the talent shifts or any of the other enablers, be it data or ESG or inclusion.
Sure. For Maybank, right, the workspace of the future, the way we are designing it or we have designed it is very people-centric. Right? What does that mean? I mean, note that the workspace calls for unprecedented change due to invasion of technology, but technology, like we all know, doesn't define the workplace. Right? It enables it. The people define it. Right? We believe people remain the key to unlocking and charting new pathways, and we strive to reimagine the workspace that creates equal collaboration. Between, like KM said, between those working digitally and those working on site. How do you bridge that and bring that together? And you need that. You need that for the gig economy. You need them for the new norm, so to speak. Yeah, post-pandemic included. Right. But the other interesting bit, Adash, that you mentioned with reference to data, right? The way we see data, it's definitely the currency of the future. I must say that. But there are some critical challenges that collectively we need to probably think through and achieve the kind of maturity that we want to achieve for the nation. Yeah? One is things like data sovereignty. Right? As more and more data shift to cloud or outside the country border, the question is, in a dispute or when it comes to the crunch, who has control over that data? Right? It's still a very fine line. How do we actually manage that, right? And also the issue of trust and control of potential data breach or data leak, right? Until that happens, no one sees this, but when it happens, it could have a very severe impact to the sovereign of a country as well. Yeah, that's one. The other is we all come from organizations which have legacy data systems. And as we build new platforms, we have new digital systems. How do you bridge this gap? How do you bring the data into a central lake? You have a central data dictionary. How do you harmonize this and how you democratize this? And how do you build a platform so that the users, the talent in your organization are going to be able to harness the data and bring about meaningful interpretation of the data? I think that while some organizations may have had a step forward in a big way, but I think a lot of us could be actually in an infancy stage and moving into that direction. Yeah. So for us in Maybank, our thought is this, right? How do we address this? One is we will always take a customer first approach, assess everything we do from a customer perspective, whether we'll risk exposing our customers' record by adopting that particular infrastructure. Right, and how do we mitigate or eliminate this risk? I think that's important. Yeah, and how do we actually move towards an enterprise-wide infrastructure solution? So what we have is an established or enterprise architecture or design, so to speak, that hopes to address some of these concerns. Right, one that's being built for the future, as well as to, like all of us know, you want to invest and ensure that investment can actually, that infrastructure can outlast the investment line, so to speak. Yeah. I think sometimes that's really what the challenge is. Yeah. Thanks.
Yeah. Jojo, what your views on as a disruptor on data or other enablers?
Yeah, well, on the financial inclusion, I think there's a lot of opportunities that we can tackle, but there must be a reason why we still continue to talk about inclusion and not address the problem of inclusion. And this falls right in the middle of this VUCA, VUCA ecosystem where there's a lot of ambiguity and uncertainty and complexity in managing the unbanked, right? The Central Bank of the Philippines have earmarked a goal of having 70% of the population really having a bank account or a transaction account that's used by 2023, and also making sure that by 2023 as well, at least 50% of all retail payments and retail transactions will be digital. I think that's a very, very important guidance that we have. The important thing is for us to be able to do it. While this is really, really new, we are working hand in hand and very, very deliberately with the Bangko Sentral ng Pilipinas, or the Central Bank of the Philippines, and we learn together. We test, we put things on sandbox and really appreciate what needs to be done, because the complexity is really for the unbanked to understand what is it that they're going to receive from all of these digital banks, right? So it's no longer going to be an excuse to say that we tried our best and still Filipino population is still 70% unbanked. So I think the collaboration with the central bank will allow us to to understand and execute strategies realistically with a similar objective in mind. And across all of these initiatives, in managing the expectations, managing the unbanked, so that they will become part of mainstream financial services, now digital financial services, is data, right? So a lot of complexity is there. We don't know what types of breaches or cybersecurity problems we'll be encountering. Maybe as we speak now, as we have our own conferences, all of the cybersecurity attackers are also in the same conferences, finding out, what they can do to move forward and basically, get away with attacking the instances that we create. So data is very important for us, not only in terms of making sure that it's transparent, that the customer is able to use it with consent, and that it's really something that is also able to help us from a marketing perspective, so that we understand who our customers will really be, and on the basis of predicting their behavior to match our products and services, we'll be able to do to manage data in that manner, specifically addressing the unbanked. So this is really a combination of objectives. How do you manage data in such a way that you're able to really penetrate the base of the pyramid? And to our point, that's the biggest challenge that's on the table for all of the digital banks in the Philippines.
Mm-hmm. Yeah, and then it's still a lot of work to be done to solve it as well. Saifi, what are your thoughts on which of these enablers kind of the top of mind for you between talent, data, ESG, or inclusion? How do you think about it?
So from our perspective, inclusion and talent are very closely linked. So in contrast to the Philippines, Malaysia has a high rate of bank account ownership, and more than 90% of Malaysians have a bank account. So being unbanked is not an issue, but underbanked it certainly is. Instead, here in Malaysia, we start to see that there's low utilization of existing digital financial services. For example, we have a brilliant national payment QR network called Do It Now. But when you talk to an MSME online and they request for payment, they'll still send you a screenshot of their Maybank app with the account number instead of just sending you a Do It Now screenshot, right? So this is where talent comes in. Because at Pertama Digital, we are bringing together patriotic individuals that are willing to go down to the ground and start to really understand what the audience is like, right? It is not about designing the most fancy app with nice graphics or animation. It's actually about product market fit. And in order to actually drive inclusion, what we need to do is we need to go and understand what their lives are like, what are their priorities, what are their needs, their family structures, their dependencies, and only then can we start to design solutions that really fit for them. So that's what we have done. And the digital banking proposition that we have made is not just about targeting certain rural areas or certain socioeconomic groups like the B40s. These words get thrown around a lot. But we are going further than that. We are doing things like promoting age-appropriate banking, right? So that we protect the seniors from scams, and at the same time prepare the youth with good financial habits before they hit the workforce. Okay, and we are also creating Islamic digital products, right? Which take in things like blended finance, so a mix of wakaf, a mix of zakat, and finance in order to make access to financial services easier for certain groups. And we are sort of hyper digitalizing the shared risk and reward of investing or extending finances to certain businesses. Another thing that we're doing, and something that I'm really against, is we don't do any things like BNPL. And we are our proposition is all about productive finance, which is helping people to earn an income and make ends meet. Okay, so I think if this is the kind of talent that you attract to the organization, then you have a strong chance of driving financial inclusion here in countries like Malaysia and beyond.
Yep. No, I think it's interesting you bring up BNPL because even though that's the rage right now, we did some primary research in Malaysia recently where we asked actually not the underbanked in the sense of low income, but underbanked in the sense of youth segment, and the top factor or the top use case that they came back with was actually personal financial management and expense management. So there's a lot of other areas that are needs that are quite valuable to address.
I was using a e-commerce app a while ago, and it offered me financing on a 10 ringgit purchase. Right. So these are the kind of things that perhaps 15 years ago I would have made a mistake with.
Excellent. Okay, good. So I'd love to look ahead now into the future. So imagine we are in 2026, 5 years out, and would love to get each of you to think about what the state of the digital economy would look like, in particular the digital financial services landscape. And any thoughts that come top of mind to you, whether it's on innovation, on competitive intensity, on how we're doing on things like inclusion and data, whatever comes top of mind for you. So what are your top of mind thoughts to describe what 2026 would look like for Malaysia or the region's digital financial services economy? Maybe we'll start, Jojo, with you, and then hear from each one of us.
Yeah, I think by 2026, there will be fewer bank branches. Not only from the digital banks or the or the new category of banks, but from the brick and mortar banks as well, right? So they'll probably find better use for their branches for other use cases, right? So, and there's going to be also and I think the most successful bank will be a technology company, right? So a technology company which is able to do open finance and basically get all of these services across, where data is shared across all bank account holders, and open finance stages the play where it's very, very highly personalized. Individuals or the unbanked, for example, will be banked by 2026, and when they're banked, what I'm seeing is that they can actually get their own financial product according to their requirements, right? They will have savings account that will be time bound and time based relative to the interest that they're going to get it. They will be able to get loans according to their requirements that will make them really get into different types of businesses. They'll be able to have access to lending to funds to set up their own. And there's going to be a lot of opportunities for new businesses across different various industries. So I think it's going to be still going to be complex. There's going to be still a lot of issues on cybersecurity, but probably more manageable. But I guess it will really, I think by 2026 it will really be a look towards better economies for different countries, particularly those who are emerging. There's going to be, probably thousands and thousands of unicorns on the fintech side, on the banking side, but they are all embedded into the lifestyle and the behavior of individuals and their customers. But I still think that there's going to be a lot of volatility and complexities, but we should be in a better place during that time.
Excellent. I like your comment on most successful bank will be a tech company. I worked recently with a stock exchange, and it's a tech company. There's not 90% of everybody in the exchange is basically a technologist, because it's all automated, and it just shifted over a couple of decades. That it's amazing to see take that and apply it to a traditional retail bank, and fast forward 5-10 years and it'll look quite different. Cockman, what are your thoughts? 2026.
I agree to what Jojo has mentioned. I think what we'll see is actually fewer banks. If I look at where I am right now as consumer, I unlock my phone and I probably have 6-7 different e-wallets on my phone right now. I think over the next 5 years there will be some level of consolidation. I think there will be probably the bigger e-wallets will probably absorb the smaller ones potentially. I think there will be a consolidation of a clear winner in terms of e-wallet as well as digital finance. And I think the larger, the more traditional banks, so like Maybank, for example, I think they will be pivoting towards a lot more lifestyle-focused applications, right? Like just what Sue mentioned, I can actually go to May right now to buy a movie ticket, for example. But I think over the next 5 years, that capability is going to expand even further. Maybe I can even buy a car through the app in the future, right? So I think that is probably where I see the next 5 years going to be like.
Yeah, big opportunities still to go. I think we all, despite the dramatic changes we are seeing, actually, the digital economy is still a fraction of the overall economy. It's still a long way to go.
Yep.
Maybe Saifi, coming to you next.
Okay, so I predict that digital financial services in this region in Southeast Asia is going to look very different from what we are seeing currently, because most of the current services that we have are very similar, or to a certain extent adaptations of products that were launched in more developed markets. So I think over the next for Southeast Asia, because we are unique with so many cultures, so many different languages, and we are relatively very close together in one small geographical area. And I think that we will execute digital financial services in a way that no one from outside Southeast Asia can actually do for us, because we know ourselves best. That's the first thing I want to say. I would go on to say also that because of the pandemic, we are also going to evolve our idea of what success actually is. And I think digital financial services are going to be more supportive of building social protections and driving social economic mobility, because it's in everyone's interest, not just those at the bottom of the pyramid, right? And last but not least, I also think that we will have a much more transparent and equitable financial sector that is inspired by decentralized finance, but still offering the protections of a regulated environment, because most of us, being citizens of a country, want to have those protections that regulation affords. So yeah, looking forward to seeing what 2026 looks like on our follow-up call.
Yeah, I think a very important point that you made, Saifi, that we need solutions for and innovation for Southeast Asia. Actually, already, I would say we've kind of gone past the first generation of digital financial services products, which was trying to say, what do we see in the offline world and how do we bring it online, to let's just innovate for online. So a lot of the new products are actually built for digital, and we don't see the equivalents offline. And I think, as you said, it's still a lot of copy pasting from seeing things around the world, but we're starting to see the innovation which is built for Southeast Asia and quite unique there. Excellent. So here, coming to you next. What do you think?
Let me start by saying this, right? I agree with you. I agree with Jojo. Banks are going to be tech companies, right? And the most successful bank will be a highly technological organization who have embraced, coupled with things like 5G, quantum computing. What else? Yeah, and I think the opportunities are immense. Fantastic. Yeah, that's one. The other is, I think, because of all of this evolution and growth, banks will become very nimble, right? They know what their liabilities are, they know what the customer's assets are. They'll find ways to bridge them and offer products and services, understanding the customer true to the nature of the customer. They truly understand the anthropology of the customer, right? And to be able to offer design and offer services that are meant for that specific customer, it'll come down to that level, yeah. But moving away from that and bringing that down to our day-to-day lives, I think one thing is we will definitely move into a truly cashless society, right? Saifi, whilst you say that we are cash-centric, whilst I can agree in some areas, but I think with QRP and everything else, there'll come a point of time that we'll have the ability to move around without our wallets, right? But not without our mobile phones.
Yeah.
Right? We'll definitely get there. The other is the mobile phones by itself, I think, will be a lot more integrated into wearables, not a physically separated device. Yeah, and this is key, as digital will need to evolve to be multi-device, multi-sensory, and more intrinsic in our lives. Last but not least, very quickly, I in the interest of time, I think IoT, Internet of Things, will become mainstream. Yeah, transactions. I wouldn't be surprised. Even today, it's already happening, right? Where transactions will be initiated by a device rather than a human, right? This is really, if we all collectively embrace technology, I think that's the way it will move. Thanks, Alex.
Excellent. Very good comments from the panel. This brings us to the close of our discussion of never normal, which is a great phrase to describe the journey on digital. I want to say a big thank you to all of our panelists, Saifi, KM, and Jojo, Suhail. Thank you so much for your comments and insights. It's been great connecting with you, and thank you.
Thanks for having us.
Thank you. Thank you.
Likewise. Thank you so much.
Thank you, Adarsh. And guys, I hope you have enjoyed the industry panel discussion of the Digital Finance Biz-Con Breakout track as much as we did. Thank you so much to Jojo, Suhail, Safi, Kokmun, and Adarsh for such an engaging and insightful discussion. It is such a great honor for us to have you powering the summit program. And also for those of you at home, remember, innovation is the way to go, lest you be drowned in the tide of time. Now, on to happier news. As I've mentioned earlier, we are giving away a total of 15 cool gadgets worth 4,000 ringgit in total at this summit. And here is your last chance to win any of these 3 gadgets, right? So we've got the Sony True Wireless Earbuds, we've got the Samsung Wireless Charger Pad, and we've got Sony Portable Wireless Speakers. So if you want to know how you can stand a chance to win one of these 3, to be one of the 3 lucky winners of the Digital Finance track, it's very easy. All you need to do is complete a short survey by scanning the QR code as shown on the screen, or you can go to bit.ly/starbiz5. We truly value your feedback as it is important for us to keep providing you with better event experience. Our events crew will be contacting the winners of this track separately after the event for the prize giving arrangement. Good luck, everyone. It is your last chance. All right, guys. Star Media Group's StarBiz Summit 2021 is officially a wrap. Thank you all very much for staying with us throughout this 2-day program. Please accept our sincerest apologies if you have encountered any inconvenience from the summit in these past 2 days. Please do share your feedback in the survey as we continue to curate greater event programs and to provide you with better event experience. And please don't lie to us. We want your honest feedback. Most importantly, we hope that you have truly benefited from this summit and that you are taking away valuable and actionable insights to start recalibrating your business transformation journey in the digital reality of 2022. As we embrace the endemic phase of COVID-19, we wish nothing but a much better outlook and opportunities, as well as greater resilience for all of us to thrive and win in the age of the never normal. Before I sign off, on behalf of Star Media Group, I would like to extend our sincerest gratitude to all 35 speakers and our 19 sponsors and partners for your kind collaboration with us in making StarBiz Summit 2021 a success. We definitely look forward to welcoming you again at the next Star Media Group's Digital X Data event in 2022, perhaps in a much better circumstance where we can engage safely with each other in person. That's the dream. Remember to visit our sponsors and partners virtual booth in Jubilee to find out about their latest product offerings while they still last. And if you need any assistance from us, email us at events@thestar.com.my. All right, guys. Once again, my name is Myra Baiti, and it has been an honor to be your host for this event. Until we meet again, stay safe, be innovative, and keep disrupting. Thank you.
You've heard it before. The connected age. Life at the speed of the internet. It's a digital world. What you might not have heard is that we can keep it safe. Because at CrowdStrike, we stop breaches. So wherever you go, go with confidence. Anywhere. Welcome to Anywhere. CrowdStrike. We stop breaches.
You always knew you'd be in for a ride. There'd be ups, downs, twists, and unexpected turns. It would be an exciting journey, even a little scary at times. And although it's difficult to predict what's around every corner, there's something else you understood. Transformation is essential for your business, your people, and your customers, so you can stay agile, resilient, and relevant in an ever-shifting marketplace. At SAP, we understand that true transformation is a journey too. It goes beyond the edges and deep into the core of your business. But it's a journey you don't have to take alone. No matter where you're starting from and where you want to go, we're by your side to simplify planning and execution and integrate data, intelligent tech, with cutting-edge ERP that will accelerate outcomes on your terms and on your timelines. The road ahead is clear. The next turn truly transformative. It's your time to rise with SAP.
Welcome to the future. You're gonna wanna get ready. You're gonna wanna get ready. You're gonna wanna get ready. Get ready. Get ready. Get ready. Welcome to the future. Welcome to the future. Welcome to the future. Here we are making history. Higher than we've ever been. You're gonna wanna get ready. Get ready, get ready. Welcome to the future.
This is the new world of work. Each day looks different than the last. But whatever work becomes, the ServiceNow platform will make it just flow. Whether it's finding new ways to help you serve your customers, orchestrating a safe return to the office,
Wait, an office? What's an office?
or solving a workplace challenge that's yet to come, wherever the new world of work takes your business, the world works with ServiceNow.
So I say the word innovation and you immediately think, the pulley. Wait, what? Stay with me. Let's go back to around 25 BC. Archimedes of Syracuse. Major big brain dude. He had this incredible idea. Here's how his buddy Plutarch reported it. He said Archimedes moved an entire warship using pulleys and his own strength. That is innovation. Not 2.0 or an upgrade or the next generation, but something that changes the way we think and work and live. The heralded breakthroughs have more often than not merely walked to the edge of innovation. The cloud and AI and low code. Complex problems can only be solved by solutions that don't cause more problems. So what would Archimedes do today? He'd build a pulley and call it robotic process automation. Make the tech learn the human, name the task, name the workplace. RPA allows companies to automate at the UI level, connecting disparate technologies. Granted, that's a really wonky sentence. All it means is this: you and your employees can now pull vastly more than your own weight.